Good morning. It's getting into good afternoon, but a good morning, and I'm delighted. I've got a very eclectic panel here. Quite an interesting topic, and pretty good segue from the last panel. Future guarding returns. If there are more than 200 hotels that are going to be up for sale, I think this does make a lot of sense. That how do you make sure that you future guard your returns? And given the way that the markets are behaving, given the way that the assets are performing and the hospitality sector in particular, it is important to be really able to understand that how do you feature guard your returns so that some of the asset owners do not fall into that 200 category of hotels which are up for sale. It'll be interesting to see how they get transacted, and perhaps the 4 panelists sitting in here are the guys who are going to be transacting those hotels. So, Neeraj, I'm going to come first to you, and given that you've got international experience, you've got domestic experience, you are perhaps the largest chain of hotels or amongst the largest chain of hotels. I just want to understand that in India we're witnessing in various segments that there is a change in the mix of the business. And I think even in the hospitality we're seeing that change in the mix because from business traveler to tourist. How do you think that the hotels are adapting to this change?
So thanks Anuj for that question. We operate about 100 plus hotels in India today. So needless to say, with the brands we have about 15 operational brands today in the country. We operate across all segments and in most locations around the country. So we have a good mix of distribution, a good mix of brands. But most importantly, geographically, we have a great distribution across the country. So we play in pretty much all the spaces. I think when you look at segments for us, the largest segment that we sort of play in is the corporate segment, or the business segment as you call it. That forms the backbone of the business. A lot of our hotels are in tier 1 markets: Bangalore, Mumbai, Delhi, Chennai, Hyderabad, a lot of locations which are geared up towards the corporate traveler. So that is our bread and butter, our bulk, as you like to call it. About 20 to 22% of our mix is from the group segment. So significant proportion in there. A lot of it now is gearing up towards the social segment. We're big on weddings now. Weddings, believe it or not, are about 15% of our total business across the country. So a huge part, a huge play on weddings, which is why last year we launched Shadi by Marriott to sort of reinforce that positioning across India. So social catering is gaining traction, and the segment we're very excited about is really resorts now. We are seeing more and more resorts gain traction. There are great ADRs coming out of these locations. Propensity for people to travel quite a bit, and I think today there's a bit of fascination about a family in India getting into a car and driving to one of these locations, right? So locations that are 2 to 3 hours out of major metros are again seeing a surge for us. So predominantly corporate, leisure is growing leaps and bounds for us, and MICE remains a big part of what we do. The last thing I'm going to say here is all of this centers around another important aspect of what we do, which is food and beverage. Yeah. Again, about 42 to 43% of our total business comes out of food and beverage. Overall in the scheme of things.
Just a subsequent question to that is, in terms of the expansion strategy, do you think tier 2, tier 3 for hotels is a good option to go in?
It's an option you have to be in. It's a growing option. Our strategy is very simple. We want to be next to demand generators, right? It means we want to be in tech parks, we want to be next to airports, we want to be next to convention centers, anything that's creating its own hub of demand. AeroCity is a great example of a location like that. A hotel we've opened in Mumbai next to the airport, JW Mumbai Sahar, another great example of that. So we want to be next to demand generators. 2, I think in terms of resorts, which I just talked about, that's a space we're very interested in. 3, we are looking at conversions. Conversions is something with all these hotels that are on the market that we just talked about. Conversions is a very interesting prospect for us from a growth perspective. It's quick in terms of execution, speed to market, all of that. So it's easy to get your hotels off the ground. And the last is, I think we see great value today in portfolio deals. And these could be hotels spread across different locations. Yes. But portfolio deals, again, allow us to bring across a lot of brands from the stable that we have, and also cut some great deals for our business partners in that front.
Sanjay, I've got two questions for you, and I know that you are sensitive to answering some of it, and feel free if you think that you may not want to respond to that. The first one is, this asset class is really long gestation, from the time that you actually lay the first brick to the time that you open the doors, it may be 4, 5, 6 years. And through that long gestation period, there are a number of economic cycles that, you face. So how do you strategize to safeguard that investment, through this long gestation period to make sure that the planned break-even period happens?
Thank you, Anuj. Well, I think it all begins with the location itself. So I think the first thing that we need to get right is the location of the hotel. And then get the right product for that location, and then subsequently get the right brand to operate that hotel. We don't operate hotels on our own, they're largely branded hotels. So that's one part of it. Second part of it, I think the earlier panel did touch upon it, was running the asset. So that's an area that's critical. But it all begins with the design itself. Very often we end up creating non-revenue earning spaces,
yes,
which come and bite you later on. So at that stage, at the design stage, you've got to get it right. So one of the key metrics we look at, for example, is how many square foot per key we build the hotel at. So when we speak about a luxury hotel, we are placing ourselves roughly around 1,100 to 1,150 square foot a key. As we come down the value chain and look at an upscale hotel, we're targeting about 800 to 850 square foot a key. Now, that's critical, because what happens is, when you're looking at return on capital employed, the denominator is driven by the square footage that you build, but also the numerator gets impacted by the square footage that you build, because you might get a slight premium on account of more spaces that you built on your average room rates, but that's maybe a 4 or 5% incremental rate that you may get. Or on the cost side, it's directly proportionate to the square footage that you built, whether it's people cost, whether it's HLP cost, whether it's upkeep cost. So these are the things that we have to be extremely careful when we plan or design a hotel. Subsequently, I think what does make a big difference between a successful hotel and one that's not so successful is the quality of asset management that the team's able to put in place.
And second, Sanjay, is that within your group, you have got diverse interests, right from retail formats to IT, office complexes, residential, malls, and then the hospitality. How much does hospitality get respect within the group?
Anuj, we are the second largest business in the group. So after Office Co, hospitality actually is the second largest business in the group. So clearly gets a lot of attention. Then we've got retail, we've got residential, we've got a couple of other businesses that are there. But clearly one of the priorities within the group, so the promoters and the investors that come in place, lay a lot of emphasis on our business.
Sartaj, you've done a fair amount of acquisitions in your prior life, and continuing with a very large asset that you have acquired. Just to ensure that you are able to protect your future profitability, what are some of the things when you're looking into these acquisitions that you make sure that those are very high priority items and put a tick in the box?
Anuj, really, in terms of the whole hospitality vertical itself within Embassy, the emphasis is in business parks, right? We are primarily an office park business, right? That's where all the cash flows
Although
come
the one
in.
that you've just now acquired or
Yes,
you're going to
and
open is not in the office park.
Yes, it's not in the office park, and again, we are also very big in the real estate. So obviously, we could have plans which are different to add value to that property, right? It gives us a position in the hospitality space. It's a listed company. It gives us an asset base, which, as you were asking Sanjay, in terms of the seriousness of the vertical within a large space like Embassy, I think the hospitality vertical is adding value to our business parks, and that's our core strategy, that we are not in business parks because we want to earn in the hotel. Yes, if it does, that's great, but we actually enhance the value of the business park, and that's a committed strategy that is going forward, and we are very sure about that. And in fact, we've sort of fine-tuned it over the last 3 years, having built the first hotel at Embassy Golf Links. It was really our learning ground. But today we are convinced that that model we want to not only replicate but enhance. And as we go forward into the Manyata Business Park and Bessie Tech Village, we refined it from one hotel, which was at the 5-star space. We're now taking it to 2 points, which is a 5-star and a 3-star, and actually having dual branded hotels which have efficiencies of their own, which Sanjay was alluding to, in terms of the cost of construct, the sharing of space, the sharing of management, sharing of power stocks. Everything gets more efficient. And to the extent we've actually gone ahead and shared one brand across 5 hotels in Bangalore now, and we were having a side discussion on that. And I think that brings in a certain amount of efficiency. So really, if you ask us where we are definitely in the business park space, we are in business hotels, we are in mixed use space. I mean, even the 4 Seasons that we have, if it was a standalone 4 Seasons, I don't think we would have acquired it, right? We have residences, we have premium residences there, we've got office space, we've got retail. So it makes sense for us to actually go into that space. So that's really where we are.
With Sanjay, coming back to you, it's very different in your case because you're really building these hotels which are freestanding assets on their own, and they need to generate profit. I mean, they will definitely rub off to some of the other asset classes, but none of your IT parks have those hotels. And these are...
So we do have hotels within the mind spaces, for example, in Hyderabad, but then that's carved out, and it's completely carved out as even from a real estate perspective into Chalet. Now, Chalet is a standalone hotel entity. Yes. And our focus is on growing that entity aggressively. That's what we're looking at.
Yeah. Anshu, one of the things that you've managed to do very well and your group has managed to do very well is to be able to, build greenfield and be able to, produce beautiful hotels across. And the panel who was there before, one of the questions, that got perhaps unanswered because of paucity of time was, given the land prices which are so high, how do you generate profitability from these hotels? What is your thought, having done these greenfield hotels, when you are buying land at open market value and competing against other product classes, and then to be able to deliver a profitable venture?
Thanks, Anuj. So first, let me pass the compliments to Sanjay. He's the guy who has created brilliant hotels for us. So if I have a foundation today on which I literally can dance and do various things, and it's thanks to what Sanjay and the team created. So that's really great. And I'm going to answer it in 2 parts. One part of it, and I'm going to lean on what Sanjay was talking when you were talking about assets and what can you do to insulate yourselves in the environment that we are in. So I think number 1 is, of course, location. You need to be absolutely right on location, and if you compromise on that at the time of building a hotel, you pretty much are going to be paying for it in future. So you build a hotel which is, let's say, outside the tech park. At that point of time, you may think that it's 10 minutes away from tech park, but as the ecosystem grows, infrastructure does not grow at the same pace in our country, and unfortunately that's a fact. You would end up discounting the product as we go along. So you would give things like an office transfer in the same rate that you're giving, so your yields keep reducing. And therefore, location, I think, is the key that you absolutely don't compromise on. And I think the second part of it is to get your capital right. If you end up overborrowing at that point of time and go low on an equity at that moment, that's when you would suffer, because we all know that projects do overrun in our country. Getting permissions is not exactly basis the timetable that you and I would set out. And therefore that pressure would start kicking in sooner than not. So I think these 2 things definitely need to be absolutely right, and I think to a large degree we did manage to get pretty much both of them right. The third part of it is that I think the only way that you will end up getting the right return on capital in the environment that we are in today, which is the upcycle that started, is that you would have to make sure that as an industry we get the utilization right, we leverage this whole demand-supply mismatch that's there, but we need to get the prices right. There is no other way that this business is viable, sustainable from an asset owner's perspective.
Prices of the land, right?
Sorry?
The prices for?
No, the prices for per room, the yield, the ARR that you end up getting. That has to get corrected, which is a very strong thing for the industry as an overall thing, that we need to have the ability to say, okay, if the demand has gone up, different distribution channels are available today, there are multiple customer segments that are available today, then how do we do that arbitrage? How do we leverage that effectively to get both utilization and the price is high. And I think that's what we've been able to turn around, and we've been able to ride that tide, and we're moving ahead on the ARR, which is what gets you a better yield and therefore a better return today.
Neeraj, coming to you, at a global level, how is Marriott planning to future guard their returns through changing technology, which is disrupting some of the proven models or existing models that we have? And for example, Airbnb, I mean, that is starting to challenge the hospitality industry. So what is the thought at sort of boardroom levels at Marriott International?
So there's no doubt, I think, that Airbnb, for example, to your point, has changed the game, right? They've opened up a whole new avenue, and I think traditional hoteliering has now got to evolve when you look at it. If you look at Airbnb today, I guess in India they have about 25,000 listings, about 100 locations. They're constantly evolving because hosts can take inventory on and off. It's hard to categorize them like we do in traditional hoteliering, where we kind of categorize rooms by real estate square footage, right? So it's hard to do that, and it's opened up a whole new avenue for us. So I think at a hotel level today, it's good for us because it's done a couple of things. One is it's brought a bit of structure to the homestay business. More structure means more travel, and that is good for all of us. And I think we've seen now with the advent of Airbnb here that there's enough opportunity for all, right? Take Goa, for example. Goa is Airbnb's biggest market. I think about 4,000 to 5,000 of their listings are in Goa alone. I don't think traditional hoteliers have seen a reduction in demand in Goa, for example, just to take that into consideration. So they're not big on the corporate space yet, but there's a lot more absorption for their offerings and products in the leisure space. A couple of things that Marriott is doing, and this is all about playing to that gallery of the sharing economy, and essentially what Marriott has done is last month, and Accor and Hyatt have already done this as well in the past, where Marriott is now combined or partnered with a real estate company in London, which is London based. They're called Hostmaker, and they're essentially a homestay company that provides services, right, in that segment. So Marriott has created a brand called Tribute Homes Portfolio, essentially, where all the listings, and this is trialed only in London at this point because as far as regulation goes, we believe we've got it right, and that is the place we'd like to start. We've always had issues around the legality of the business, and I think London has allowed us that platform where our team feels that it makes sense to kind of trial this out there. So essentially, the listings are vetted by Marriott from a safety, security, and other aspects. Members get points when they stay at these locations. So your loyalty program comes into play, which is something that we kind of work on the back of. All the listings have 24-hour check-in, 24/7 service provided by Hostmaker, a certain quality of linen and toweling in the rooms, security, there's basic kitchen essentials, there are amenities in rooms that you can use and all of that. So it sort of brings, it's sort of a mix where that hotel touch starts to come in. And we believe that experimenting in this space will allow us to open up a whole new avenue. So it's not about the impact that Airbnb is having on traditional hoteliering. I think traditional hoteliers are now going out and saying, we want a piece of that action too, right? So it's a flip there, I think, where we've got to evolve to the changing times and play to that gallery, right? And it's all about the digital population today, and it's about getting that product out there and letting them do what they want.
And then, it makes so much of sense. Look at it, what has happened with Walmart and Flipkart. Exactly. And it's exactly the same story where, some of the traditional retailers, who were thinking will not be able to compete have actually gone and shaken hands and merged, with the online players, and the gap between online, offline, or, technology trying to radically disrupt is really merging with the more traditional business. And great point that you say. Anshu, I just want to, continue with that discussion on the technology side and ask you, are the hotel operators looking at technology and leveraging the technology to improve their business productivity, profitability?
Everyone would like me to say yes. So yes, in a manner of speaking, if you put it at a large scale, yes, technology is being used, whether it's revenue management or whichever level of revenue management that it may be, asset management in certain ways, etc. But in the true sense of the question, which is, you have technology split into various other facets today. It's Internet of Things, whether it's artificial intelligence coming out to machine learning and so on and so forth. Is the industry using it today? I think there are steps that the industry has started taking, and I'm talking global industry right now. So yes, big brands like the Marriott, the Hiltons, and the Accors, for example, have definitely taken a huge step towards that. I think if we were to restrict ourselves to the Indian market, one needs to understand that technology comes at a price. And not everybody today in the country has scale to be able to afford that technology. So that's one part of it, that you may have an intent to do that, but you may not have the investment capability. Two, I think the legacy systems also have huge entry barriers for allowing different types of technology. So interoperability between legacy systems today with this new technology is a little difficult. So you may want to do a whole lot, but I don't think it has reached that level of it at this point in time.
Sanjay, I've got a key question, and this I think a lot of the audience sitting on the floor would also want to know is, we hear this that there are 200 hotels up for sale, yet there is very little consolidation that you read in the papers that is happening. What's the reason for that? Is it that the existing asset owners do not want to part it? The new IBC code, in my opinion, has the teeth to be able to make sure that happens. Yet we're not seeing that transaction. We hear that there is a lot of pain on those 200 assets, but yet the consolidation is not happening at the speed that we would want to see that consolidation happen. And unless, in my opinion, that consolidation happens and that sort of the lower end gets consolidated with players like the four of you sitting in here, the market is not going to start to gain momentum. So what is it that is prohibiting?
So, for very long, the valuations there was a mismatch between valuations.
Agreed.
That's getting sorted out to some extent. The fact that a lot of the companies have either moved to ARC and some now to NCLT, that gives a huge opportunity for getting fair valuation. In some cases, great valuation. So now I think it's all about ensuring that the property that you're looking at for potential acquisition and growth is going to be free of litigation post the process. We've known of cases of acquisitions which happened 3-4 years back, and people are still fighting legal battles to get possession of the asset. So that's one challenge, because whoever's losing out on that asset, especially if it's through a third party exit, is going to contest it. And legal recourse takes time. Having said that, I think between now and the next year and a half is probably the right time to make some acquisitions. The valuations will remain fairly reasonable. The fact that now I was going to step into something which I shouldn't be speaking about, so I'm going to sort of retract that. We would like to look at growth through the inorganic route. At the right opportunity with the right price point, I think we would like to make double the or whatever, look at growth. Challenges, as I mentioned, are more legal in nature than anything else.
Got it. Sartaj, just continuing with that point, given the choice between greenfield and ready or brownfield, where would your interest be in growing your hospitality portfolio?
Anuj, we are very sure that if it's our business parks, it's obviously greenfield. And to add to Anshu's point, in terms of location, even within the business park, we now determined that we bring the hotels to the front of the park rather than our experience at the back of the park. Right? So that's important. And not only will we have them just greenfield pure hotels, there'll be twin hotels, there'll be dual branded hotels with F&B space. So we'll keep our hotels F&B light and offer the opportunity of F&B retail sort of coming into that space along with A-grade office space. So, that's going to be the model definitely going forward. But as I discussed with you and with Sanjay, I think we are in that space that if we have an opportunity, let's say for an example at our Pune business park, where we don't have any more space, but there's something across the road, which is, which is an asset that we can seriously look at, we would be open to that. So I think that's the way we'll go. We, I repeat, are in business hotels for our business parks.
Right.
Anything that fits into that space and adds
value to that.
we will definitely look at that.
Got it.
So Anuj, may I just add over there, anything that's value accretive for the portfolio, we'd certainly look at it. Our portfolio is fortunate enough to be performing extremely well, great EBITDA margins, etc. However, we will not take on distressed assets at the cost of see, if they're distressed on account of location and product, why should we take them on our portfolio? If they are distressed on account of, say, maybe capital structuring or asset management, then we see an opportunity, we look at that for sure.
So basically, you're saying that if I cannot really do anything with that asset, I'm not going to take it up, irrespective of the value that you get.
Growth is not going to happen at the cost of diluting up of operating performances.
Neeraj, two questions that I have. One is you mentioned about F&B, and I parked that point. Is sort of future-proofing some of the revenues through F&B, through having great F&B, and you future-proof the revenues? And the second is, what are some of the parameters that you judge the health of the industry with, and what are how are they stacking up currently for India?
So first on the F&B front, Anuj, I think there is the revenue component of F&B. There's also the reputation component. I think today in India, F&B is essential to the reputation of a hotel in many, many locations. It is changing, but it is still very important. And as you get into tier 2 markets, tier 3 markets, it's all the more important, right? It's essential that your food and beverage is good. I think what we've figured out over time is that it's not one size fits all. We've got to have a different approach to what we do in North India, to what we do in South India, and so on. Even within different larger cities like Bangalore, for example, there are micro markets like Whitefield and the CBD and all of that, where you have to have a different approach. So I think you've got to play to the gallery when it comes to F&B. A. B, I think gone are the days when you need to have extensive number of restaurants. I don't think today hotels with 4, 5, 6 restaurants make any sense, right? I think you've got to maximize the operating hours of the restaurant, right? So it's not about having traditionally we had a restaurant that opened for breakfast. It had a big, large buffet. We didn't know what to do with it during lunch. We'd either run lunch buffet just to keep the lights on, and work the same for dinner. I think we've now evolved from that sense. You're moving to all-day dining concepts, which kind of activate that space post-breakfast. So I think that's an important element. You've got to sweat the asset, as Sanjay mentioned sometime earlier. I think you've got to have a plan in place and work towards that. B, you've got to look at the cost of manpower involved and other essentials in F&B today. You have to use technology. You have to make sure F&B is driven as a separate revenue center, literally. I think we talk a lot about OTAs in the room space, but what about F&B, right? It's important to be selling that product on all platforms out there, right? And there are a number of platforms today that are doing considerably well in India. So it's about making sure that your restaurants are accessible, they're relevant, and they're cost effective on the revenue on the F&B front. We've got to utilize spaces better, and we've got to kind of bring it down. We've done a bit of a study at Marriott, which basically tells us that if you reduce a restaurant that is not delivering at a certain number in the schematics of that property, your gross operating profit will actually go up by somewhere between 3 to 4% by eliminating a restaurant that's not performing, right? So having more restaurants is not necessarily the right way.
Sartaj wants to
Just want to add something to that. I told you that we are now actually keeping the hotel assets F&B light and actually creating F&B spaces and hubs around what we are building, so that they have options to go there, and they're standalone guys who come and give that. Yeah. The other element that we've fitted into our mix is convention space, right? Now going forward, each of our hotel properties would have substantial meeting spaces, because we found that, again, learned from our Golf Link experience, was that we didn't have enough space. We assumed that the corporate tenants within the park have their own space. They don't. They came to us looking for larger spaces, meeting spaces, town halls, etc.
Exactly.
So that's the other thing that we brought into the mix, is substantial convention space, which will not only cater to the business parks, but also to the ecosystem around that place.
And flexible spaces as well,
Yes.
right? Spaces that can flip from
Absolutely.
doing meetings and events to social events, right?
Absolutely.
And being able to kind of do all of that bit. In terms of the second part of the
Second
question,
part,
which
yes.
was
Sorry, I cut you.
which was what do we kind of look at? We obviously look at what everyone else looks at. We look at average rates, we look at RevPAR, occupancy numbers, all of that. But essentially, we get a sense of what's going on from two parameters. I think today, if you look at India's average occupancy, we've seen a growth year on year. We're in a good space. The ADRs ain't reflecting that sentiment at the moment. And all the stuff about great technology and all the other stuff we're talking about will not make sense unless we can lift the ADRs to where they need to be, right? So we've got to be a bit more courageous, I think, as operators, and go out there and make sure that we command the price that we should be getting in many of our locations, given the demand, especially on weekdays, in cities like Mumbai, Bangalore, Hyderabad, for example. So we've got to look at that. We've got to also look at culling out certain elements, like Anshu alluded to, of having this propensity to give airport office transfers, right? People get office transfers today to their offices, airport pickups that are included, breakfast that's included. I think we've got to almost go back to the drawing board, go back to basics, and sort of build up from there on the ADR front. But the key metrics for us that we look at to evaluate our health as a company is how we're doing in relation to our competition. So market share is a key indicator for us. It's a key performance indicator for us in different markets. And we monitor that metrics very, very closely as well.
Anuj, if I may add, we're asset owners and asset managers. So if I can add another perspective to the metrics, I think one of the key metrics is the return on capital employed. And I think that makes, eventually that's what works for us as asset owners, but eventually that's what will make sense for an asset manager as well. Yes. And everything therefore really comes out of this, because that's what matters, A. B, very close to what Neeraj is saying as well, is that intrinsically the Indian industry is very occupancy driven. So utilization is what everybody really talks about, and it comes a bit naturally to everyone, inclusive of the people who sell us and the channels that you're basically using. It's the ARR where the struggle ends up happening. And I'll give you a simple example in a quick minute. Most people, and I'm not talking a particular sector, genre, salespeople would generally find it very easy if they say that, okay, this asset or this company has a demand of 2,500 room nights, and therefore I need to give the best rate. They may not put it in perspective that that office that you're talking about is actually 5 minutes walking distance from you, which means that I should be demanding my location premium, right? So that's where the premium needs to come in, because when I pay for a disadvantage for location, I should get that.
Yes.
But traditionally, that doesn't happen. 2,500 room nights, oh, that's really big. Let's give a great rate, right? So I think the return on capital is really eventually a right metric to look at from a CEO perspective, and then you take it down and you say, okay, how much of it should come out of utilization, how much of it should come out of the ADR, how much of it should come from various other functions, and then it gets added together.
Angela, I've got a quick question, and I know we're going to run out of time. I would have ideally asked Sanjay, but I cannot, because I know he would not be able to answer. So I'm going to ask you that question is, what are the exit routes for an asset owner? How do you monetize the assets? How do you monetize the investment? How do you get back the return other than just dividending out the profits?
So I think the academic answer Sanjay would have also given, which is pretty much what is there. And of course, Lemon Tree has set a new path for everybody today. So all hoteliers are really looking at it and saying, oh my God, that's brilliant.
How you monetize.
But of course, so there are those, a regular sale of an asset to another entity is obviously a right way of looking at it. There's REITs, which is there, which I think at this point of time is premature in the Indian market. I think the commercial REITs have to first take off, and then the hotel REITs would really come into play. Our business is too spiky for it to be a steady state income model, so I don't know how well or how much can one depend on REITs at this point of time. IPO, of course, is the second route to it. So I think these are the traditional routes to it, but I think a lot of platform businesses, brand businesses, would want to seek various ways to monetize their investment.
Very good. I know that we've run out of time. One quick question that I'm going to ask, maybe sort of 5 seconds, 10 seconds response on that is, if you were asked one point which will help an asset owner future-proof the asset or future-proof the revenues from that asset in the hospitality, what do you think will be that one point that he or she should bear it in mind?
I'll go for it. So two things. Number one, don't overborrow. I think leverage is the most important part. Make sure that when you're buying an asset, you go heavy on equity first, less on debt. We know what are the problems when it comes to building out a new asset. So I think that's number one. And number two would be that get the location right. Don't compromise on it at that time.
Neeraj?
I'm going to add to that and say build right and build on time. You know, your entire thing goes off track when there are those delays in construction, which kind of take everything out of proportion. So get it done on time and build right.
Sanjay?
I think Anshu and Neeraj have covered it, but yeah, location would probably be the first one as far as I'm concerned.
I just say cost, keep the cost in mind, have a specific cost per key in mind and drive it more efficient. And in our case, as I keep saying, build twin hotels, right? You share the spaces, you share and also maybe leverage a brand and get equity and efficiencies around the brand itself.
So wonderful, you know, from cost to location to make sure that the debt equity ratio is correct and to ensuring that you build right, build on time are the mantras. So thank you very much, and here we're going to hand it over to you.
Thank you very much. Do we have time for a couple of questions? Yes, do we have any questions? Yeah, can we have a microphone over there, please?
Hi, my name is Upendra Kulkarni. I'm from Wari Hospitality. My question is to Ms. Anshu. There's a property, actually, I'm just want to have some, your insight on that. There's a property near Hyderabad, which is about 40 room keys, 40 keys, and has 16-acre property. It's a distressed property. The owners have approached us to manage that property. Now it's been 2 years that we are talking to them. And there are 3 restaurants. So do you think it's a good idea to go ahead with the property, or it's not good idea to go ahead?
Very little information for me to give you any sensible advice on that, but I'm very happy to talk to you offline and give you an answer to that if I can.
Sure, okay.
Yeah. We have a question over the right side.
Table number 5.
Yes, good morning. My name is Lata Mohandas. Very, very interesting discussion. Now, talking about revenue generation and revenue management and virtual assistants, robots taking over, automating jobs, where do you see the next skill sets, the requirement for new generation skill sets? And how would you enhance revenue using the best set of skill sets, which will be new?
Well, I think there's I'm going to give a shot at this, and then maybe some of the others can help out with this. I think the skill set is going to come from being able to make sure this technology is an enabler. Right? There's a lot of data out there. There's a lot of information out there. It's about sifting through this information and making sure you pull out the relevant data and then use it in the right manner. Right? I think data around specifically to revenue management is really about predictive analysis today. Right? It's looking at trends. In the past, revenue management was about past trends. I think nowadays it's about trying to analyze and predict the future and getting your rates right and getting ahead of the curve when it comes to revenue. So the skill set we're going to have to need is to be able to sift through that data and make sure that we act upon it, A. B, I think the other part is going to be around customer loyalty. The information we have at our disposal today should allow us to be able to provide services to a customer even before the customer knows that they want it in an ideal world, right? So I think part of that is going to be important as well. But I think today, as hoteliers, we're kidding ourselves when we're talking about having the right internet at the hotels. I think that's a given, right? And I think to a point that one of the other panelists alluded to earlier, it's got to be scalable, it's got to be an enabler, and it's got to be cost effective at the end of the day. But the idea is the skill set we're going to have to need is to be able really to sift through this data, make a sense of it, and then execute to it going forward.
Yeah, because we as customers also, we are looking to novel experiences with the use of AI and virtual assistants?
Yeah, and you know we have all the tech. I mean there are mattresses today that give you information on how the customer is sleeping.
Wow.
There are smart rooms. There are smart TVs. All of that bit, right?
Yes.
I mean today there's a fascination, for example, for increasing the size of the TVs in the guest rooms. Data will quickly tell you that the TV is probably the least used equipment in a guest room today, because most of us are so addicted to our own screens. So we've got to again look at what makes sense to the relevant markets and then put it out there.
Okay.
On that note, if I could also pitch in with a question, because you in fact mentioned about a hotel with several eateries around to reduce the strain on the F&B cost, and even Mr. Sartaj pointed about convention centers. Why have a full-blown convention center in the space of the hotel? Last week when we were in Kenya doing the Hotel Summit Africa, we were staying in a 4-star hotel that had no gym. When I asked them where's the gym, they said there's a shopping complex nearby. If you want to go, we'll give you a pass. You can go over there and you can use the gym at no cost to you. So as a guest, you are entitled to a gym, but it's not on us because they're not managing. So is this a trend that we are seeing? Because we're talking about distressed assets. Now, all of these things like convention center, maintenance of the gym, restaurants, all of these add to the cost, which will, if not managed properly, then that will eventually lead to a distressed property. Do you think this is going to be a trend in the near future, outsourcing all of these facilities?
I think it's going to be very segment specific.
Yeah.
Luxury hotels will need to have on-property facilities. Hotels that are not necessarily luxury and are in areas where these alternate facilities can be provided within walking distance, there may be opportunities to use that.
Very good.
Yeah. Great. So thank you very much.
Last
I had a quick question.
Okay.
Like while you're, hi, this is Satyajit. I'm an architect, and I wanted to know like your perspective on the aesthetics particularly. I mean, like when you're looking at the property, other than the location and of course like the things which are like logistically correct. So aesthetics is like one thing which is sort of hard to place in terms of like where exactly you place it priority wise. Like how important you feel the architecture plays a role in terms of the revenue generation or.
So one of the key things that you have to look at is the entire ergonomics of the hotel, the back house of the hotel. What are the facilities that have been put inside over there? Because let's say for mid-market players, one of the biggest things is that you're operating, your cost platform needs to be right, and that can only be if there is efficiency that has been built into the system. And that's across board. That's not just limited to your to just one aspect of the business, which is utilities or power, etc., but just the whole ergonomics of the hotel. So it can start from as simple a thing as how many people would you require to service room? How many people would you require to cater to an order in room service, for example? So I think the entire back office planning, the facilities that are there in the hotel, and of course the overall infrastructure therefore of the hotel. Does the architecture of the hotel actually aid in the operating performance, or does it actually hinder? Is it going to get you a revenue premium of sort, or is it not going to get you anything? It's just going to be a stabilizing factor. I think they all need to be evaluated.
I can only add to that is that I think from experience we've learned that we should go to architects who understand the hospitality space, right, and who've got huge experience in that space. In terms of aesthetics, I think business hotels need to be, aesthetic wise just efficient, right, but still nice to arrive at, right. So we don't go overboard on that. But definitely the experience of the architects who are building the whole space and the amount of detail that you go into in the conceptualization stage, or especially in a mixed use, is extremely important.
Right then. Thank you all very much. Can we please show some energy to our panelists who have